I think it is optimistic. This comes after Walmart and Target had some great numbers coming out last week. Walmart was projecting $500 billion in sales and Target $74 billion in revenues going into the next year. So I think the consumer is spending. The consumer is strong. There's this perceived view that the economy is still strong. We've had good jobs numbers, 4% GDP. We've had stability and some de-escalation in terms of the trade war skirmishes. And what I think is happening now in retail is also that for a while we thought that retail might sort of die out. And instead, it looks like it's evolving. A lot of these companies are looking at the consumer and saying, how do we get their business? We have to invest in online. We have to invest in loyalty programs and discounts. And I think a lot of these things are helping hold up these retail names in that sector.
Rick, let's ask you just about what's been happening with bond yields. We spoke with Treasury Secretary Steven Mnuchin earlier today. He said, don't fear the inverted bond yield. That make sense to you?
It makes perfect sense. But it isn't me and it isn't Treasury Secretary Mnuchin we have to worry about. It is investors in general, not only domestic investors, but global investors. There is a stigma attached to curve inversions. End of story. I agree that central bank games over the last decade have distorted the yield curve. There's no question. There's no question long end yields would be higher. And even if you use 3-month to 10-year, which the original research that this whole issue was predicated on, even if you do that, it still doesn't change the fact that central banks have impacted long rates. They've impacted what type of investor and at what level of purchase now makes sense. And I think that that's what the Treasury Secretary was getting at. But it really is going to fall on the shoulders of Jay Powell to communicate that should an inversion occur and the economy be not affected by that inversion and keep chugging along.
Sarge, Bob just made the point that it's a broadening rally, which is encouraging to see. At the same time, we've hit these new highs in late August on fairly thin volume in a typically attractive month seasonally. How do you weigh those two factors off against each other in terms of how optimistic you are?
What the investor has to do now is weigh the potential for future growth versus the need for valuation, for further valuation increases. I think both of my colleagues here made excellent points. I think the consumer right now is exceptionally strong. I think we have increased disposable income. We have increased savings. We saw consumer confidence from the conference board today. Outstanding numbers. In opposition to my friend Rick, which I usually am not, but I am at this time, I do think it's time for the Fed to take a step back. I do think that Chairman Powell signaled that on Friday. I think I would like to see either them take a pass in December or maybe just hold steady at $40 billion in October.
If the consumer's so strong and the economy's doing so well, why should we worry about
Because the dollar's too strong, and that's important. If there is one bogeyman out there that might come and get us, I believe it's these dollar valuations. I mean, where's the Dixie now? I can't even see it up here. It's under 95. Let's keep it under 95 for a little bit. Well, thank you.
But Rick, it's already softened the last couple of days. I mean, I'm surprised to see the action today because there was no further trade headlines, and this morning it was kind of flat, but the dollar's been weakening throughout today's session.
Absolutely. It's far off its lows today in general, but there was a point a couple weeks ago where intraday we came within a couple of whiskers of trading 97. Now we're briefly a little bit under 95. I take Sarge's point to heart that there are pros and cons with a strong dollar. But I, like Larry Kudlow, believe a strong dollar is in the best interest of the country. And with regard to the tightenings of the Fed, the inverted curve is one issue. Whether the Fed should continue or not is another issue. I have mixed feelings on whether the Fed should continue tightening. I think Jay Powell has it right. He should do what he thinks the market can bear, observe the signals, and kind of take it one step at a time. I don't believe Jay Powell has anything penciled in permanent marker.
So is the dollar impacting your sort of stock and sector positioning at the moment?
Yeah, so, we've actually seen a lot of activity coming into the energy, oil and gas and natural gas related space. We have a couple of ETFs in that area. And what happens is when you have a softening dollar, those areas tend to do well as emerging markets. So we saw flows coming into some of our Brazil ETFs, emerging market ETFs, oil, gas and energy, off of that news. So I think it's, it's there.